Hello and welcome to Unacademy, a one-stop destination for all the English medium civil service aspirants. Welcome to another session of Economy Weekly Recap, wherein we are going to take important economy-related articles in different newspapers and will be analyzing these articles. For this week, this is the list of the articles that we'll be looking at. Now, before I start the discussion, a very important announcement. Many of the students in the course of preparing for civil service examination will face a very important issue, that is how to prepare for current affairs. The syllabus is not defined. Everything under the sun you will have to read. The sources are not limited. So one question that we generally face is how to prepare for current affairs. We at Unacademy are very happy to announce you can program Unacademy's Current Affairs Navigator. This will be a comprehensive current affairs course for the civil service examination, and the speciality of this course is the classes under this initiative will be taken by the respective subject faculties. And in terms of coverage, what are the sources we are going to cover? We are going to cover multiple newspapers, articles from PIB, Yojana, Kurukshetra, Economic and Political Weekly, down to Earth. Regarding the classes, every week there will be 4 classes. Timing is same, 9:30 p.m. to 11:30 p.m. on Tuesday, Wednesday, Thursday and Friday. For more details, please click on the link provided below. Now let me start with the first very important article which appeared in Business Line on 14th of March 2024. Government of India, in the course of promoting production and consumption of electric vehicles, has announced a new initiative, a new scheme. The name of the scheme is simple, Electric Mobility Promotion Scheme 2024. Now what is this idea or what is the concept of Electric Mobility Promotion Scheme and how it is different compared to earlier schemes? Please understand. Point number 1, government earlier launched an initiative by the name of FAME. Although I am writing small letters, please understand the actual name will be written like this, FAME. It's an acronym. Faster Adoption and Manufacturing of Electric Vehicles. The first round of FAME was announced by the government in 2015. It was supposed to be implemented only for 2 years, but later it got extended and it was implemented for more than 2 years till 2019. And after FAME 1, Government of India again announced one more initiative, FAME 2. Under FAME 2, which was supposed to be implemented only for 3 years, starting 2019, it was extended by 2 more years for 5 years till 2024. So this was started in 2015 and this was launched in 2019. The subsidy allocation or the money that was allocated under FAME 1 was somewhere around 890 crore rupees. And under FAME 2, it is 10,000 crore rupees. But regarding these initiatives, certain very important events have taken place in the past. Please be very, very careful. I am discussing so much about electric vehicles because if you look at the question, there was a question which was asked in the UPSC Civil Services Examination 2023. The descriptive question was, the adoption of electric vehicles is rapidly growing worldwide. How do electric vehicles contribute to reducing carbon emissions and what are the key benefits they offer compared to traditional combustion engine vehicles? It is basically related to electric vehicles. But in the answer writing, you could also include the initiatives that have been taken by the government. So coming back to the discussion here, we launched FAME 1 2015, then we launched FAME 2 2019 to 2024. I said certain important events that have taken place regarding the FAME initiative has been, point number 1, initially what was the subsidy announced under FAME 2, Government of India curtailed, reduced the amount of subsidy. For example, the amount of subsidy under FAME 2, when it was announced, the amount of subsidy per kilowatt hour was fixed at 15,000 rupees. 15,000 rupees. And the limit up to what extent the manufacturer could claim subsidy was kept at around 40%, at 40%. But Government of India last year mind you, reduced both of these numbers from 15,000, it was reduced to 10,000 rupees per kilowatt hour, and this from 40% of the price, it was reduced to 10% of the price, which in simple terms would reduce the amount of subsidy per vehicle that will be given by the government to the manufacturers in order to reduce the market price and sell them in the market. This is one very important change that was announced by the government. Second very important change, whenever you study about these schemes, generally, not always, generally, there will be a component of promotion of domestic companies. Promotion of, that is, the products which are manufactured by the domestic companies, indigenization will be promoted. In simple terms, these manufacturers who are going to get the subsidy from the government, they were asked to ensure that 50% of their parts, 50% of the components that they purchase should be purchased from the domestic market. And please understand, many of these companies who have claimed subsidies, many of these companies who took subsidies from the government, they were found not to be reaching 50%. They had reported wrong data to the government. And in that context, Ministry of Heavy Industries, MHI, which is the nodal agency for the implementation of the scheme, sent a notice to all these erring companies, asked them to either give the right data, prove them that they have taken at least 50% of the components in the domestic market, or else submit back, return back the subsidy that they have already claimed. That is the second very important event that has taken place regarding FAME initiative. Third very important event, or let's say the news regarding the FAME initiative has been that in the recently announced budget, Government of India cut down the allocation of subsidies for the FAME initiative. Now, having looked at the FAME initiative, there has been a discussion. Should Government of India continue to provide subsidies to the manufacturers? To what extent? Can we keep on providing the subsidies till perpetuity for them to keep the prices lower? Should we not withdraw these subsidies? That is the reason there was a lot of discussion. There was a lot of demand from the manufacturers that Government of India should continue to provide subsidies so that they will become more and more competitive over a period of time. But on the other side, various experts also argued that government should not continue the scheme. Rather, they should wind up the scheme, allow the market to become more and more competitive on themselves. That is, let the private sector companies compete with themselves. Over a period of time, we will be able to achieve better results. Now, following that debate, or let's say that argument, the Ministry of Heavy Industries has come out with a new initiative, that is Electric Mobility Promotion Scheme. What are the important points? Point number one, this is applicable only for two-wheelers and three-wheelers. Please remember, the scheme is going to provide subsidies only for electric two-wheelers, E2W electric two-wheelers, and electric three-wheelers. That is point number one. Now, many of you will ask me, sir, why only two-wheelers and three-wheelers? What will the bus manufacturers do? There are buses, electric buses also. What will they do? For you, please understand this. A very important reminder. Last year, Government of India has already launched one more initiative by the name of PM E-Bus Seva. PM E-Bus Seva. There is one more initiative, PM E-Bus Seva. I'll come to that. But more importantly, the electric mobility promotion scheme. What are the features? Point number one, it will cover two-wheelers and three-wheelers. Point number two, the subsidy will be limited to 10,000 rupees for two-wheelers and 15,000 rupees for three-wheelers. Subsidy will be 10,000 and 15,000, and that is the reason the number of vehicles that will be covered, the data is also given. For two-wheelers, the number of vehicles that will be covered will be more than 3 lakh, and for three-wheelers, more than 30,000 vehicles would be covered, and this scheme will be applicable for 4 months. The scheme will be applicable, is available only for the 4 months duration starting from the month of April. Fourth very important point, under this initiative, an electric manufacturer, two-wheeler or three-wheeler, if they want to get the subsidy, they will have to register, they will have to get registered, or else they will simply say they will have to be re-registered. What do you mean by re-registered? these companies are already registered under the FAME initiative. Now they will have to be re-registered under Electric Mobility Promotion Scheme. So these are certain very important points associated with the new announcement, and as such in the headline itself it is visible the total allocation of the funds for the scheme is 500 crore rupees. And again, this is a very limited time period scheme for 4 months. Now I mentioned one more scheme, PM E-Bus Seva Scheme. PM E-Bus Seva Scheme. This was announced last year. Under PM E-Bus Seva Scheme, Government of India wants to promote operations of electric buses. Remember that. Name itself is self-indicative, but anyways, the government wants to promote the operation of electric buses on PPP model, public-private partnership model. And for this scheme, Government of India has allocated more than 57,000 crore rupees, out of which, although I am saying government has allocated, out of this 57,000 odd crore rupees, Government of India will be providing only 20,000 crores, remaining will come from the state governments. So for buses, there is PM E-Bus Seva. For two-wheelers and three-wheelers, there is the government electric mobility the promotion scheme now. So please be very careful. We have discussed 4 types of schemes. For promotion of electric vehicles, 4 types of schemes. You can use these schemes to answer questions either under ecology and environment, or if there is a prelims based question on this, you will use this data, right? So this is basically the first article that I wanted to discuss, and this question was asked in the UPSC Civil Services Examination 2023 mains paper. Let me go to the next article, which appeared in Hindu newspaper 12th March. What is the title of the article? RBI takes delivery of $5 billion sell or buy swaps held 2 years ago. Very important article. Why? What is the logic behind it? What is RBI trying to do here? Very simple. Please understand, there is a tool which is available with Reserve Bank of India by the name of Open Market Operation. OMO. Open Market Operation. What do you mean by Open Market Operation? Under Open Market Operation, Reserve Bank of India will sell or buy the government securities. Very simple. RBI will buy or sell government securities, and according to the requirement, if RBI wants to promote liquidity, RBI will buy. If RBI wants to reduce liquidity, RBI will try to sell the G securities so that the liquidity situation in the market will be adjusted. That is point number 1. And whenever RBI conducts OMO in association with the forex market, associated with the forex market, what do you mean by forex market? The market, in short, foreign exchange market, wherein the currencies are exchanged. Currencies, dollars are sold, rupees purchased. Dollars are purchased, rupees sold, etc. like this. That is called as a forex market. Point number 3, RBI plays a very important role in stabilizing rupee value. Please underline the term stabilizing. RBI doesn't decide, because we do not follow fixed exchange rate. RBI doesn't decide. RBI will help in stabilizing the exchange rate, and that is where there is a tool called as sterilization. There is a tool used by Reserve Bank of India, or the process called as sterilization. What do you mean by sterilization? What is the connection to open market operation, etc.? Let's try and understand this. Imagine a situation where there is a sudden inflow of dollars into the Indian market. That is forex market. Sudden inflow is there, or else you can also imagine there is a sudden outflow of dollars. Sudden outflow, either inflow or outflow. Situation will differ, but role will be there for RBI. Sir, what is the process here? What will happen if there is a sudden outflow? If there is a sudden outflow, it simply means before the outflow will happen, the foreign investors, I am taking one example, foreign investors would have sold a lot of these bonds or shares in the market. They will sell these instruments in the market, collect the rupees, go to the foreign exchange market, sell rupees. They will sell rupees, I am talking about this. They will sell rupees and buy or purchase dollars. Simple. They will sell the rupees, purchase dollars. And when they will sell the rupees, supply of rupees in the market increases. Supply of rupees suddenly increases. And when the supply of rupee increases in the market, forex market, rupee will start getting depreciated. Rupee will start getting depreciated. Rupee will start depreciating, dollar will start appreciating. Now please do let me know, can you allow, if you are the RBI governor by the way, can you allow this kind of uncontrolled appreciation or depreciation of rupee in the market? In this case, rupee is depreciating. In another case, rupee will appreciate. So whenever rupee appreciates or depreciates beyond control, beyond certain limit, it will start harming the economy in terms of value of imports, exports, etc. That is the reason Reserve Bank of India enters the market. It is already a participant of the forex market. It will enter into the forex market, conduct certain transactions, right? One such transaction is basically the sell or buy of the foreign currencies. Sell, buy, use or swaps. Now you will ask me, sir, what do you mean by sell, buy, swaps? How does RBI use, right, OMO here, etc.? Very simple logic. If RBI will basically ensure that here the supply is very high, rupee supply is very high, if RBI will ensure that rupee supply will come down, that is, if RBI will start purchasing rupees from the market, can I simply say it will help in stabilizing rupee value? All of you okay with this? I'll repeat it again. In this example, rupee supply is very high, and as a result of this higher rupee supply, we are experiencing rupee depreciation. So what if RBI will enter into the market, start conducting various transactions and reduce the rupee supply, take out the rupee supply from the market so that rupee will be stabilized now. Now how does RBI do that? How will RBI do this? Very simple. RBI has a huge forex reserves. RBI will take some of these dollars, sell it to the bank. I repeat, RBI will sell it to the bank, right? And in return will take rupees from the banks. Is it okay? I'll repeat it again. And by the way, those who are wondering, sir, what is the connection of the banks here? My dear, banks are also part of the forex market. Banks will also absorb or sell lot of these currencies in the market. So when RBI will sell the dollars, in return will take the rupees. And this transaction is first part. This transaction is leg 1. And the same transaction in opposite direction will be conducted after certain period of time. And this is basically called as dollar sell or buy swaps. Is it okay? There are two legs. In the first leg, RBI will sell dollars, purchase rupees. And after 2 years, right, because the swap has been done for 2 years, after 2 years, RBI will return the rupees and take back the dollars. This is basically two legs of the transaction, and this is called as a swap transaction. RBI conducts these kind of transactions so that the rupee stability will be protected or rupee will be stabilized in the forex market. All of you okay? Now, what is the article saying? What is the article saying? One way is by conducting swaps. Second way is by either selling or buying government securities. For example, imagine you're part of the banking system. Rupee supply is very high. Because the rupee supply is very high, because of the forex market, because of the transactions in the forex market, then it will have a huge impact on rupee exchange rate. Now RBI can simply sell the government securities and take out liquidity from the market. That also can be done by RBI, which is basically called as sterilization. Now come back to the discussion here. 2 years ago, RBI conducted the sell buy swaps. Sell buy swaps. That is, RBI sold dollars and in return took rupees from the banking sector. And now the 2-year duration is over. RBI says, I will not continue. There is a term called as rolling over. Rolling over basically means continuing the same thing. Rather than rolling over, I'll take the delivery now. 2-year duration is over, I'll take the delivery. Now some of you might be thinking, sir, why? Is there any logic behind it? Why is RBI simply not rolling over, continuing the same for another 2 years? Why is RBI ready to settle this swap transaction? RBI says, in the coming days, people will start paying lot of taxes. Advanced taxation will be paid by various taxpayers. For payment of taxes, they will withdraw the money from the banking sector. They will use the money from their account and pay the taxes. And many people will also, many companies, to be very precise, many taxpayers will also pay GST. And as a result of this, there will be an outflow, huge amount of outflow of rupees from the banks. Now that might create a further deficit in the banking sector. So I want to settle this transaction, settle the swap, so that 41,000 crore rupee, 41,000 odd crore rupees can be pushed into the banking sector. So these are some of these very important points associated with the article provided here. Now, is it relevant to UPSC? Is it required for UPSC examination? Please have a look at the question that was asked in the UPSC Prelims 2023. Which one of the following activities of the Reserve Bank of India is considered to be part of sterilization? Is considered to be part of sterilization. And what do you mean by sterilization? Basically, RBI intervening, RBI participating in the forex market to stabilize the rupee value. So, A, conducting open market operation. In fact, this is the right option, but let me eliminate the remaining three. Oversight of settlement and payment systems. That is the role of RBI, no doubt. In fact, the idea of a payment and settlement system has been there in the discussion very recently. Please be very careful. But that is not associated with sterilization. Debt and cash management for the central and state governments. That is the role of RBI as the banker to the government. So C is also wrong. Regulating the functions of non-banking financial institutions. For this, the government has given the powers to Reserve Bank of India. That power has been given to Reserve Bank of India, but that is not associated with sterilization. So right option is conducting open market operations, thereby stabilizing the value of rupee either by reducing the supply or increasing the supply. So right option for the question is option A. This was asked in the prelims 2023. Third article, which has grabbed many headlines in the last couple of weeks, has been the concept of TPAP. TPAP basically stands for Third Party Application Provider. A lot of discussion has been happening around it. It's slightly technical, but you don't worry, let's simplify it. NPCI very recently has given the license, has allowed Paytm to offer UPI services as a TPAP. Now you'll read this article, you'll be confused. What do you mean by TPAP? What is the concept of TPAP? Right? And why Paytm is getting this license of TPAP? Is there any logic behind it? Simple. If you have a Google app, that is Google Pay app, I'm pretty sure many of you will be having this Google Pay app. Or else many of you will be having Phone Pay app. And many of you will be having both of them, Google Pay as well as Phone Pay. Just open those apps and see that generally they will provide a UPI ID to all of you. Is it okay? They will provide a UPI ID to all of you. For example, it can be your mobile number. I'm simply writing XYZ at let's say Paytm. Paytm used to provide at Paytm. That was the handle of UPI for Paytm. But in case of Google Pay and Phone Pay, if you open it, you will not see the UPI ID with ending of Google Pay. You will never see at Google Pay. You will never see at Phone Pay. You will not see that. This is point one. I'll come to this, don't worry. Now, if you have your mobile phone app, I'm pretty sure most of you will have this. Open your mobile phone app. You can have SBI, you can have ICICI, you can have the HDFC, you can have Axis Bank, Canara Bank, doesn't matter. Open the mobile app. And if you search carefully, the bank would have provided you with a UPI ID. If you open it, you will see that the bank would have provided with you a UPI ID. And if you observe it carefully, imagine you have a Canara Bank account, right? That is a mobile account. You will see that it will end with CNRB. If you have ICICI, it will end with OKICICI. Now many of you will say, okay, understood. In case of these apps, they will not end with the names of the apps, but in case of banks, they will end with the names of the banks. But what is the meaning of it? Meaning is very simple. Whenever you talk about wallets or platforms, they generally are not allowed to provide these kinds of the UPI handles. Why? If you want to provide those kinds of handles, that is UPI addresses, These are supposed to be financial institutions such as banks. The banks will easily provide all of these, right? Let's say UPI addresses ending with their own names. They will provide it. But sir, many of you will simply say, sir, I use Google Pay to make transaction. It allows me to conduct transactions, especially UPI. Sir, I'm using Phone Pay. I'm able to make UPI transactions. My dear, you are able to do that for a very simple reason. These Google Pay wallet or Phone Pay wallet, they would have a tie-up with the banks. Very simple. They would have tie-ups with banks. For example, if you have a UPI address of, let's say, Google Pay, if you see that, they have tie-up with HDFC, they have tie-up with Axis, they have tie-up with ICICI Bank. So that UPI address at the end, they will have OK ICICI like this, which means these are wallets, but more importantly, please understand, can I simply say these are apps? Yes or no? Can I simply say these are apps? And more importantly, these are nothing but the third party application provider apps. These are nothing but third party application provider apps, which means the third party application providers, these are nothing but companies, right? Let's say companies or wallets, etc. They will provide certain apps to you. Using these apps, you can conduct UPI transactions. Is it okay? Using these apps, you can conduct UPI transactions. But the catch is that the TPAPs generally have a tie-up with a bank. They have a tie-up with the bank, and right through these banks, they will ensure that UPI transactions are completed. Is the logic okay? TPAPs individually are not allowed. They will have the license from NPCI, National Payments Corporation of India. Whereas TPAPs will use the infrastructure of NPCI and ensure that whatever UPI app you are using, that UPI app provided by them is compliant. It is following the standards or the guidelines issued by NPCI. But they cannot complete the transaction. They will enter into a tie-up. They will have a tie-up with the banks like this. But on the other side, banks, right, they may or may not enter into these tie-ups. They may directly provide UPI services to you. For example, if you have, let's say, ICICI Bank account, open your wallet or open your bank account. Can you conduct UPI transaction on your own? Do you require Google Pay for that? Absolutely no. But if you open Google Pay, you want to conduct UPI transaction, definitely yes, they will take you to account. The Google Pay will take you to your bank account. So the TPAPs have to have a joint venture, or let's say basically a tie-up with the banks like this. Come to the point now. Come to the point. What is being discussed? Earlier, understand this, earlier the system was very simple. The parent company is 197 Communications Limited. Under 197 Communications Limited, there was a Paytm app. Rather than saying there is still Paytm app. And this 197 Communications, having received banking license, had also opened the Paytm Payment Bank. The Paytm Payment Bank. And have a look at this. Here is a app. Here is a bank. So this third party application provider, TPAP license was given to the Paytm Bank. They were basically piggybacking. That is, they were basically having a joint, right, let's say association with the payment bank. And the Paytm app was supposed to or was able to provide UPI transactions. Very simple. Is it okay? I'll repeat it again. The payment bank had received the TPAP license from NPCI. Now Paytm app used to use this TPAP license through Paytm bank. Now they used to provide UPI services. But RBI has stopped the operations of the payment bank. Paytm payment bank operations have been stalled. And the TPAP license is there with the payment bank. So that is the reason payment app, that is the Paytm payment app, was facing an issue. Will they be able to continue to provide UPI services now? Will they be able to provide UPI services? If the TPAP license is gone with the payment bank, now they will not have any option but to stop UPI services. That is the reason RBI asked NPCI, RBI told NPCI The 197 Communications Limited, OCL, has given an application for a TPAP license. They have given an application for a TPAP license. Can you please consider it? And NPCI has approved, please understand this, NPCI has approved the TPAP license now. It has approved TPAP license. Now many of you will ask, but sir, I already have a Paytm handle, the UPI ID, which I had opened with Paytm Payment Bank. What will happen now? All of those handles, that is basically the UPI accounts, whatever handles were given at, that is basically at Paytm, whatever were given, now all of these will be transferred to another bank, right? All of those will be transferred to another bank. So this is basically the discussion related to the concept of the TPAP, Paytm bank, right? Other banks, etc., etc. Done? So please be very careful. Lot of discussions happening regarding the concept of Paytm, payment bank, etc. Be very careful. Now let me go to the next article. 5 more firms raise 8 crore rupees through social stock exchange listing. SSE listing. Now what is a social stock exchange? Is there any logic to this idea of a social stock exchange? Is it Bombay Stock Exchange? Is it a national stock exchange? Or has Government of India set up one more stock exchange to compete with BSE and NSE? What is the idea? Understand the logic behind it. Government of India back in the year 2019, proposed the concept of social stock exchanges, SSE. I'll start using the short form now, SSE. What is this idea for SSE? Simple. Imagine you have lot of money. Be happy. Imagine you have lot of money, huge amount of money, to the extent that you want to do something good for the society. You want to provide lot of money in form of charity. But there is one concern. There is one issue that you are facing. Issue is that you want to donate crores of rupees, but you don't know whether the funds will be used for the right purposes or not. You don't know, because once you donate the money for charity, you cannot keep on running behind who is going to use, how they are going to use this 1 crore rupee. To address that issue, Government of India proposed the model of social stock exchange. Although it was announced a couple of years ago or many years ago, for the first time, a company was listed in the social stock exchange last year itself. Now, your duty is to find out which is the first company to get listed in the social stock exchange. First company to get listed in the SSE. And meanwhile, you are taking up an assignment, take up one more assignment. Second question is, which is the first entity to get the TPAP license in India? I'll repeat my statement or the question, which is the first entity to get the TPAP license in India? Both are very important. Now come back to the idea here. So Government of India proposed the idea of a social stock exchange. Now what will happen in social stock exchange? Imagine I run a charitable organization, or else they will use a technical term, non-profitable organization. I want funds. There is a lack of funds. So I want to raise funds. Government of India says there is a methodology which you can follow to raise funds easily from the social stock exchange. Now the idea is very simple. I will raise this issue. That is basically I will float in the market saying that I want, let's say, 10 crore rupees for conducting this kind of a initiative. That is social initiative. I need 10 crore rupee. Now investors in the market, again when I say investors here, please remember the investors in case of social stock exchange are those donors. The people who want to donate for a cause, these are investors. So these donors will invest and purchase an instrument by the name of zero coupon, zero principal. Please remember, zero coupon, zero principal. These are nothing but zero coupon, zero principal bonds. Now many of you will ask me, sir, what do you mean by zero coupon, zero principal bonds here? Logic is simple. You invest in any instrument in the market. Let's say government bonds. Can you sell them? Of course, yes. Right? Can you trade them? Yes. Selling is nothing but trading. Selling and buying is called as a trading. Can you earn returns on these bonds? Yes. Right? Will the market price of the bonds keep on changing? Of course, yes. You will be earning certain yield on this. Coupon will be provided. But in case of zero coupon, zero principal bonds, remember this, neither the investor neither will earn a coupon or will be given the principal back. Simple idea. Zero coupon, zero principal means what? The investor or the donor will be neither given the coupon amount nor will be given the principal amount. You have invested, let's say, 10 lakh rupees. Neither will you earn any interest on it, nor will you get the 10 lakh rupee principal back. These are called as zero coupon, zero principal instruments. Please be very, very careful. And please understand these types of instruments, because one area where UPSC has been focused in preliminary examination is the area of financial market. And within financial market, generally the tendency is to ask a question on the bond market, certain instruments in the bond market. So this is there in the newspaper, please be very careful. Now many of you will say, okay sir, agreed, I want to donate, I'll purchase these zero coupon, zero principal instruments, right? Now what is the process after that? How do I come to know that the company is going to use the money for the right purposes? There are a lot of conditions if you want to get listed. That is, a company wants to get its, when I say company, it is an NGO, by the way, non-profitable organization, or even for-profit organizations are allowed. So you will have to get your instruments or products listed, but along with that there will be a lot of conditionalities. For example, auditing has to be conducted regularly, right? You will have to keep on providing a lot of information to the regulator, etc. And these social stock exchanges, the approval has been given under both NSE as well as BSE. It will be set up as a branch of these indices, right? Or let's say these exchanges, there will be a branch for social stock exchanges itself. Although the announcement was done in 2019, for the first time a company was listed in 2023, and the article says 5 firms, right? 5 firms have been able to raise 8 crore rupees under the social stock exchange. Most of the article is related to which company has been listed, how much money they have been able to raise. Do not worry about it. That is not relevant for UPSC exam. The relevance is very simple. Concept of social stock exchange, concept of zero coupon, zero principal bonds. Now, based on this, I have given an MCQ here. Consider the following statements. The social stock exchanges are regulated under Reserve Bank of India. Statement is wrong. These are regulated by SEBI. Obviously, these are part of NSE and BSE. Approval has been provided, so it has to come under regulation of SEBI. Zero coupon, zero principal bonds are comparatively risky, hence carry coupon rate higher than that of 10-year G security. Please understand, there is no coupon rate. There is absolutely no coupon rate. It is zero coupon instrument. So even second question is wrong. Even second question is wrong. By the way, please do let me know, are there any other instruments in the market? This is a third question, by the way. Right? Let's do this exercise. Are there any other instruments in the market which are issued as zero coupon? Can you name any example that you have come across where the instrument has been issued as a zero coupon? This was once asked in the UPSC preliminary examination. So both the statements are wrong. Right option for the question will be neither 1 nor 2. Let me go to the next article. SEBI chief for bite-size REITs, infrastructure investment trust to draw retail investors. Now what is the argument? What is the issue all about? Please understand, in the domestic market, that is in India as a financial market, the retail investor participation has been very low. This is a fact, by the way. The retail investor participation has been lagging behind, has been very limited. Now, Government of India as well as the SEBI, Securities Exchange Board of India, they have taken various measures to promote retail investor participation in the financial market. But having said so, even today, there is a need, there is further need for reforms to attract retail investor participation. And some of you might be thinking, sir, is there any reason, is there any logic? Why should we do that? Let them not participate. What is the issue all about? If they are interested, they will participate. If they are not, let them not participate. My dear, please understand the logic behind it. Whenever you talk about investors, most of the investors or most of the people in India even today prefer to save the money in the form of fixed deposit and savings bank accounts. Most of us keep our money, our hard-earned money, in, let's say, savings bank account or fixed deposit and call it as investment. But if you compare how much returns you are going to earn through those and what is the inflation rate, right, you will realize that the real rate of returns will be negligible or negative in many of the instances. That is one issue. So there is a market available for you. There is a market available for you. Why not utilize it and earn more money? Second, if more and more people, investors will participate in this market, don't you think price discovery will be much, much better? The competition will be much higher. Companies will be able to raise funds in a much better way, etc. So that is the reason there is a need to promote the participation of retail investors in the market. And to promote retail investor participation, for example, the chairperson of SEBI says, right, we want to promote REITs as well as infrastructure investment trust. Now many of you will ask me, sir, what is this REIT? What is this infrastructure investment trust? If I want to simplify it, very simple idea. All of you heard of mutual funds? All of you heard of mutual funds. What happens in a mutual fund? Simple. All of you will purchase units from a mutual fund company, asset management company. The company will collect money from you, invest in various markets. It could be in the debt market, it could be in the equity market. They will invest. And based on the returns, they will withhold a certain commission and pay returns to you. Pay your money back on your investment. Of course, there is a lot of risk there. You must have seen the advertisements. Mutual funds are subject to market risk. There is always a risk. Apply the same logic to, let's say, infrastructure. Very simple idea now. Right? Apply the same logic to infrastructure. There is a company which wants to invest in multiple infrastructure projects. Now they will issue certain instruments in the market. You will purchase the instruments. The money that they have collected, they will invest in infrastructure projects. Of course, again, they will have certain operational expenses, maintenance, etc. They will take the charges and whatever returns are there, they will distribute it amongst the investors. That is basically the idea of an infrastructure investment trust. Do not complicate it. It's a basic idea. Although it's a very technical concept, let's simplify it. It is similar to a mutual fund concept only. Only difference is in mutual funds, they are going to invest in financial instruments. In infrastructure investment trust, they are going to invest in physical assets. That's it. Now you will basically tell me, sir, there is one more term, REIT. You have explained what is infrastructure investment trust, and there is one more term, REIT, real estate investment trust. REIT is nothing but real estate investment trust. Here they can invest in infrastructure. Here they can invest only in real estate. That's a basic difference. In fact, nowadays there is one more concept which has become very popular. Fractional ownership. This is becoming famous now. Fractional ownership. In fact, the term fractional ownership has been mentioned in the article. In the article, there is a mention of the term fractional ownership, but it is not in the context of the infrastructure investment trust or even in the context of REIT. The chairperson talks about the equity market. That is, there is a fractional investment or fractional ownership in equity market, she says. Now you will ask me, sir, what is the idea? What do you mean by the statement there is a fractional investment in equity market? The logic is, imagine there is a company which has floated the shares. It has issued shares in the stock market. I will purchase some of the shares. You will purchase some of the shares. Your friend will purchase some of the shares. So all of us will own little, right, or let's say fractional or a fraction of total ownership of the company. But that is in the equity market. Nowadays, the concept of fractional ownership is also becoming in the form of platforms. That is, let's say there is a very big infrastructure project which is supposed to be launched. I alone cannot invest. The investment requirement is very, very high. Only one infrastructure project. So all of us will pool in money only in one project. That is very important. Only in one project, all of us will pool in our investment and develop this project through this company. That is a platform, fractional ownership platform. right? That is basically becoming very, very famous now. And the chairperson says we need to promote these kinds of fractional ownership instruments so that we'll be able to attract a lot of retail investor participation. In fact, that has been done already by the SEBI. That is, in simple terms, earlier when this model of REIT and Infrastructure Investment Trust was proposed and implemented, the minimum threshold investment was over 1 lakh rupees. Now it has been reduced to 10,000 to 15,000 rupees. But basically the idea was, if I reduce the threshold investment, retail investor participation will be higher. That is the point they are discussing here. Okay. So next article, by the way, the last article for this week, RBI likely to upgrade some NBFCs to top layer this year. Now, what is the issue all about? What is the discussion all about? Understand the concept very carefully. We have banks, and we also have non-banks, non-banking financial companies, right? NBFC. I'll use a short form, NBFC. Now, in the context of banking sector, Reserve Bank of India, which is a regulator, has implemented very strict regulations. Although, despite so many strict regulations, many of the times we will see that there are certain issues in the banking sector, but the logic is simple. In case of banking sector, a lot of strict regulations have been imposed by Reserve Bank of India. But RBI simply says, even though I'm regulating banks, the failure of the bank, which will have a huge impact on the economy, we have non-banks. But in the context of non-banks, right, again RBI is a regulatory authority, the regulations are not very strict. Regulations, right, are comparatively much looser compared to what regulations we have in the banking sector. But if non-banking financial companies will start failing, right, don't you think that will also have a huge impact on Indian economy? Of course, yes, it will have a huge impact. So what RBI has done is, couple of years ago, RBI introduced a system of regulation for non-banking financial companies, And the regulation is referred to as scale-based regulation. Scale-based regulation. Under scale-based regulation, right, basically the SBR, right, the logic was very simple. Right, the logic was, we will divide the NBFCs into 4 categories. Based on certain parameters. The first category will be referred to as a base layer. This will be referred to as a base layer. Above this, we'll refer to this as a middle layer. Above this, it will be called as upper layer. And finally, this will be referred to as top layer. So we have base layer, middle layer, upper layer and top layer. And the logic of classification was very simple. Based on various parameters, I'll keep on classifying these NBFCs. For example, most of the NBFCs will come in the base layer. Right? Those which have assets of up to 1,000 crore rupees will keep it under the base layer. Of course, many other types also have been included. Those right, top 10 NBFCs in terms of asset size, but default will come in the upper layer. Top 10 NBFCs in terms of asset size, but default will come under the upper layer. And other NBFCs, that is those with asset sizes of more than 1,000 crore, and these are not the top 10 NBFCs in terms of asset size, they would be classified in the middle layer. Now many of you will ask me, sir, what about top layer then? Who is classified under the top layer? Even though it has been more than 2 years since the introduction of this concept of scale-based regulation, there is no NBFC as of now in the top layer. And the argument is simple. As you keep on moving from the bottom to the top like this, from the base layer to the top layer, the regulations which are imposed by Reserve Bank of India, they'll keep on increasing. For example, if you are classified in the upper layer, there are around or more than 15 NBFCs which are classified in the upper layer now. If you are classified in the upper layer, once you are classified, from the date of announcement in the next 3 years, there is no option, you will have to get your NBFC listed in the stock market. Is it okay? I'll repeat it again. Once you are classified in the upper layer, no doubt from the date of announcement in the next 3 years, you will have to get your NBFC listed in the stock market. So RBI said right now we will not include anybody in the top layer, but in the future, if I feel there should be more regulations, if I feel there is a need for more strict guidelines to be implemented on these NBFCs, I will shift some of these NBFCs into the top layer. Now the article simply says Reserve Bank of India, because generally the review will happen in the month of March now. Right, Reserve Bank of India is likely to upgrade some of the NBFCs to the top layer. Right, some of these NBFCs are expected to be shifted to the top layer. Now you might be thinking, why sir? Is there any logic behind RBI's discussion here? The logic that has been given is simple. We want to regulate these NBFCs in a much better way, much more stringent way, so that over a period of time, these NBFCs will be very important, right? Systemically very important. In terms of asset sizes also, these will be very large. And if there is a need for a universal bank to be given, that is a license for universal bank to be issued in the future, then RBI may consider, right, these players, these NBFCs which are present in the top layer. That is the reason RBI says, I'm considering a review of these NBFCs so that some of them can be listed in the top layer. Okay. So these are the various articles that I wanted to cover this week. If you are yet to subscribe to our YouTube channel, kindly do it now. Thank you. Have a great day.